So good morning, ladies and gentlemen. I hope you already had your breakfast, and we are about to start our forum for today. For those who are new in the forum, this is actually a monthly sort of breaking in the morning forum for IMMAP. It's like kapihan, wherein we tackle hot issues of the day, something to do with or related to digital or to our industry. And for this morning, we will talk about the BIR revenue, Memo Circular 63-2012. It has something to do with recording of our business transactions with our industry partners and how BIR is looking into our taxation process. So, not known to everybody maybe, there was a confusion on tax imposed on ad placements when both publisher and ad agency bills an advertiser over the years that has been happening. So we're very lucky that 4As and PANA took the lead in the last few years to really sit down with the BIR to help us look into the issues and fairly distribute taxation. So for clients and advertisers to make income payments for media advertisement contracts directly to the advertising agency or directly to media supplier for the total cost of media advertisements, inclusive of creative and media services, advertising commission or service fees, and the value-added tax. Confusions arise from the invoicing of income payments and recording of gross receipts, such that the reporting of revenues does not accurately reflect the income recipients and which may affect the computation of taxes due to transactions. So this Revenue Memorandum Circular 63-2012 seeks to standardize the process of recording deals with advertisers, media suppliers, advertising agencies for placement and to clarify the tax treatment of such. So I guess the audience here, I saw the profile of people attending here, mostly the finance officers of a lot of us, our members, and people who are in the digital agency. So this is really a good forum for you to understand what is happening because this revenue circular was in effect since last year. Okay, so we have four panelists today, and we're very lucky and grateful to have the BIR Commissioner, Ms. Kim Hinares, with us this morning, no less than the top honcho of BIR. So let's give her a warm of applause. Later on, we will introduce her. And also, we'd like to inform you that the panelists that we're inviting are the people who started all of this. We have Chief Navales, who is the External Relation Country Leader of Procter & Gamble Philippines. He's also the Corporate Secretary of PANA and the President of Ad Standards Council this year, 2012. The other one is, other panelist is Ruel Loyola. He's the President of Workshop 1. He was the 4A's President last year, started doing all of this understanding issues. And he's also Director for this year of 4A's. And the last one is, of course, Mike Palacios, our Vice President for IMMAP. So, may I request these four people to please come in front of the table so we can start our forum. So, to give us our opening remarks, let's call on the IMMAP President, Mix Ramos.
Very quickly, good morning. So, actually, the RMC was issued by the BIR last December. So, I think until now, a lot of us still have a few questions. So, this is a very good forum to be able to raise them to people who are very much involved and very knowledgeable about this. So, I won't take much time. Good morning. So, welcome and thanks for coming so early to the Breakfast in the Morning series of IMMAP. Okay.
So next one, to give us probably in a nutshell a summary of what this BIR memo circular is all about, let's give our warm welcome to BIR Commissioner Kim Hinares, who will give us the meat of this circular.
Good morning to everyone, and thank you for inviting me to your forum. Basically, I think this problem has been a long festering problem. I was with the Bureau of Internal Revenue first from the year 2003 to 2005, and then I came back July 2, 2010. Like most things, I had expected those problems that I had faced previously would have already been solved, and I would not be facing the same problem when I come back. No? But it doesn't seem to be the case. Not only for this issue, no? But there's a lot of issues that when I came back, it seems like the problem that the industry had was not resolved. It's just been meandering around, going around, and there's no final solution. Because as far as I'm concerned, my belief is that whether or not people agree or not, any problem should be solved as soon as possible. The solution may be a bitter pill, but at least it's a solution rather than having all this uncertainty. To put also in context, when your group came to visit me, I told them, I basically understand the advertising business, because in my younger days, I actually helped put up an advertising agency. So basically, I understand where the profit of the advertising agency come from, both from media placement and from production of ads. So, as far as the bureau, the confusion comes around because two people receive the same thing. Somebody, let's say, Old Swiss Inn, when he advertised, he pays, let's say his advertising is 1 million, but unfortunately he gets two receipts. One from the advertising agency who placed it, and another, let's say if he placed his ad in Bulletin or Inquirer, he gets another receipt from Inquirer. The receipt is in the name of the ad placer, not in the name of the advertising agency. So basically that creates the problem, because as far as the Bureau of Internal Revenue is concerned, and the National Internal Revenue Code is concerned, we go by documents. So if you have a receipt that says you receive an income, then you should report it as your income. If you want to expense it out, you should have another receipt that said you expense it out. But unfortunately, in the setup of the advertising agency, that is not there. So I think year in, year out, the advertising agencies are being audited, and I don't think you could support that principle. I mean, I know that that's how the business works, but the bureau goes by document. So your document cannot support what the industry is really doing. I think like any problem, there's always a time when it is right for solution. I believe in 2003, nobody in the advertising agency wants to have split billing. Even when they met with me, actually the first solution I gave them is that you split the billing. The media channel receive what actually they get. The advertising agency receive the commission. Initially, the meeting said, they said that can be done, which is, I think, the thinking also before. But when we met last year, they were open to having the media be the one to give the commission to the advertising agency. So basically, the advertising agency will only be receiving the commission. That's why the first RMC that you the important thing is the placer of the app does not hold two invoices. He only holds one invoice that represents what he actually paid. That's the whole principle behind that. Because if he holds two invoices, then he can deduct both. So that's the whole principle behind the RMC. After we issued the RMC, which I thought was agreed upon already by everyone, suddenly some people come and call me up, not just from your side, but also from the media channel, telling me that it's not like that and all those things. So basically, when they came back again and they now said they agreed to split billing, that's why we came up with the other RMC. Now, the clarification there is you can choose between the two. If you can record it according to the first RMC or the second RMC. Because at the end of the day, if we go back again to the principle, it really depends on your receipting. So if you have a receipt that said you earn 1 million, then that's what we will go after you. If your receipt said you earn 150,000, then that's the one that we will go after you for. So basically, the principle behind the two is just to make sure that whatever receipt is there, it covers only what is actually paid. Now, if you receive something you did not actually earn, then that's your lookout. So the two basically clarifies everything as between how the advertising agency, the client, and the media provider are supposed to govern their relationship. Now, if you do not comply with it, then you cannot complain. When we come and audit you, because we already gave you a guideline. So that's basically what it was all about. I think that's clear enough, right? So that's a basic background of what the RMC was all about. Now that making sure that if a client who advertised pays 1 million, in his hand he only have a receipt of 1 million, and everyone else related to that transaction are receiving basically only 1 million. Unlike in the past, we find that he's holding a receipt for 2 million because one is from the advertising agency and the other is from the media provider. So basically, that's what those two RMC basically clarifies. Okay, and also I think it clarifies also the withholding tax, because if your withholding tax is based on gross amount. So if they pay you 1 million, of course they would have to withhold from 1 million. And when you pay the other side, then you have to again withhold. So basically, it just it put in the RMC basically really capture what the industry should really be doing. And I hope, since we put a period on the problem, I hope all of you and your finance officer would comply with it so that there's no more confusion. If you don't comply, then please do not complain. That's all. Thank you.
Thank you very much, Commissioner Linares. So we will now hear reactions coming from our panelists, beginning with Clint. Maybe you can have you around 3 minutes reaction or comments and suggestions.
Yeah, thank you. Well, from the advertiser side, as the Commissioner said, this provides clarity. For so many years, there's been a lot of discussion on what to do. So finally, we have very clear guidelines. And not only are the guidelines clear, we actually have two options. So So for those advertisers who want to follow split payment option, you know what to do, right? And our suppliers, inventory, so on. For those who want to follow the first guideline, we have another option. So we very much appreciate this outcome because it puts clear solutions and gives the different advertisers options, whatever they prefer. What we've learned when this came out, there was no reaction from the advertisers except just the immediate question of what does this mean? How do we do it? So it was a question of implementation, which was right away clarified as they read and learned the process. Other than that, it was a very welcome change for them. When our 4A's partners are happy, we are also happy.
Morning. It's nice to be here to also give our inputs on the RNC. But before I give my, I'd like to thank Mr. Hernandez for finally coming out with an RNC that will guide our industry. Because this action actually started about 15 years ago, and the 4A started, and I think Vince can attest that it's been festering, as Commissioner said, it's been festering for a long time, and finally there are actually two RMCs to guide our industry, and it clarifies a lot of one, it recognizes the circuitous billing process that the agency had in the past, and it clarifies now how we can move forward, and there are two options. Now, Commissioner, please feel free to correct me if I'm wrong in interpretation. Because there have been questions brought forth to the 4As when it comes to clients who prefer to still pay the agency everything, and the agency is the one that is supposed to disperse the amount to the media and the other suppliers. For these cases, what we recommend is that you need to well, because there are two implications. One is that the withholding tax is based on the 100% that you collect. And aside from the withholding tax, there's also the municipal tax, which is about 0.75 to 2%, depending on which city you're based. So that will be now a point of discussion between the agency and the client as to who will shoulder those taxes. Because if we go by the standard 15% agency commission, the real income of the agency is just really the 15%. So rightfully, the withholding tax should be on the 15% and the municipal tax should be based on the 15%. So you need to discuss with your client on how to handle the withholding tax that will be levied on the agency when in fact the 85% is a part of the agency commission, the agency income, and also the municipal tax. The Finance and Standards Authority of 4As has actually done some computations. And from their computation is that if the billing starts to reach 75 million, then it will be more cost efficient for the client to actually hire someone, probably one or two additional people to do the split payment scheme rather than continue on with the discussion of the agency on how to compensate the agency for the 2% withholding tax and the municipal tax. So maybe that's also in your minds and just sharing with you the concerns that was brought forth. But ideally, if you can convince the client to follow at least RMC 63-2012 or RMC 91-2012, then everything will be much easier for everyone. Commissioner MMA.
Hello, everyone. And I guess I just want to provide like a industry perspective, at least from the from the digital side. One of the interesting nuances about our industry is, in my head, in terms of media placements, there's a big three in terms of where the majority of advertising budgets go. The same way that in television there's like 2 and 7, right? In digital, it's Facebook, Google, Yahoo. Those are the three. Of which only one of the three is actually located here. So Google just put up their office, but both Facebook and Google are essentially, if you dealt with them, they're most likely an overseas remittance. So parang they invoice out of Singapore and or Ireland or something like that, wherever they are, and parang everyone's you're required to remit in that direction. So I found in my experience that a lot of advertisers would tend to contract that out to the agencies to fulfill. So we tend to follow, but they're not really crazy about doing the split billing. In fact, part of the retainer of some agencies is to facilitate the split billing on behalf of the advertiser. Which is okay, I guess. Pero yun na nga, I guess that's what kind of makes our industry a little bit unique, is that it's whether that is a swipe of a credit card, from self-serve account on Google AdWords, or it's an invoiced account. Eventually, when you get big, they allow you to invoice. They allow a postpaid type of billing system. And that's something, I guess, that we have to navigate. The fact that 75% of ad budgets go to overseas sites. So, ma'am, how does that work?
Off the top of my head, when you advertise to somebody overseas, at the end of the day, you cannot pay him back, but because it's services rendered probably abroad. But because of that, you basically have to shoulder the whole 12%, which you don't have an input.
But that stops with you. That stops with you. You're holding.
Yeah, whoever in the Philippines sells it. But at the end of the day, it's the consumer. Let's say if the receipt goes directly to the advertiser, then the advertiser does not have an input back. Then in that sense, it's 12% more expensive. Now, if there's a advertising agency in between, in the sense that you will have to charge them 12% if you don't have the input back. You now have the input back. But because they paid the higher 12%, so at the end of the day, they still are the one who pays the 12%. Then when you pay the foreign advertising, a media provider, you do not withhold taxes. Because you're not. But when your client, the client pays the advertising agency, they have to withhold the withholding tax on the whole thing. So that's where unless the relationship is such that the contract and the payment comes directly from the client to Google, to whoever, and then you agree that they pay you just the commission. So your receipt to him will just be the commission, and the receipt of the Google will be for the portion of the business. It's also the same as the revenue memorandum circular. We have to really split the TV. If you choose to bill the whole amount, then that will go to your gross receipt. Just make sure the receipt of Google is to you, so you can deduct it. Yeah. Otherwise, you cannot deduct it from your gross receipt.
Thank you. We will now open the floor for question and answers for the audience. Kindly just raise your hand to be acknowledged. You can ask Commissioner Hinares or our panelists here. think we have a question here.
Good morning, everyone. This question is for Commissioner Kim Henares. Actually po, yung question ko po is basically that with regards to the circular. It's the concern of the association with regards to VAT. The association, the IMMAP. Kasi po yung IMMAP po, di ba po, yung, basically on the certificate of registration, na walang VAT po na nakalagay sa tax activities. But then parang recently sa mga circulars na lumalabas, parang kahit for non-profit purposes yung association, kailangan pa rin mag-subject sa VAT yung membership fees. So, yun lang po yung clarification na gusto ko sa nila. No? Ano po ba talaga? Subject po ba talaga sa VAT yung membership fees or not?
So it just means that you have to go back and update your registration.
Okay. So yun po. Kasi yung question ko lang po, bakit why then when we apply for the registration, hindi nalagay sa certificate of registration yung VAT as a tax activity. So, ano po ba yun?
Starting January 1, 2013, you're subject to VAT. So you should, kasi hindi naman pwedeng hantayin namin mag-update ka ng registration bago namin sabihin na VAT ka, di ba?
Yun po, actually, we have decided na nga to file our VAT kasi nga, kaysa naman kami ma-audit at ma-penalty din kami. So, nag-file po kami ng VAT, but still, we would like to want lang po some clarifications with the VAT aspect of the membership fees. Yun lang po.
I said it is subject to VAT.
Kasi yung lumabas po na memorandum circulars lang parang on the association, parang nag-pertains ng particularly on recreational clubs, condominium association. So walang specifically for non-profit organizations like IMMAP. Wala pong specific,
But when we say the country club, the golf club, the association, it offers,
association.
unless your membership dues is a donation.
Okay. So when it comes to donations to association, hindi po siya masasabi sa VAT.
When you're an association and you are accredited donee agency, first you have to have accreditation.
Like,
Exempt donee agency.
okay po.
So, kasi even if you're non-stock non-profit, but you generate revenue, you are still subject to VAT. But like for example, if your association suddenly have a lot of money, you buy a building and you rent it out. It doesn't mean because you're a non-stock non-profit corporation, the rental is no longer subject to VAT. It is subject to VAT. Because it's a income, it's a receipt.
Apo.
Yeah,
So, ang question ko po, what if yung revenues naman na generate namin is for the members, for the association itself, not for any kind of other income generating activity? For example, we use...
Kasi yung VAT, okay, example ko sa VAT, no? Ito yung pinamagandang example, it doesn't have anything to do whether you generate revenue or not. But like for example, me or you, no? We buy something from abroad for our own personal use. You send it to the post office or you ship it here. They will tax you for that. Diba? Hindi ka naman nag-negosyo dun sa ini-import mo.
Yes.
So, ibig sabihin, hindi dahil nag-negosyo ka o hindi. Dahil meron kang receipt na dapat siya is subject to VAT. Yun. Tapos at the end of the day, sabi ko nga, kunyari ho, ginawa kayong, sabi namin, dapat mag-report kayo na kung may income kayo o wala. Kung talagang wala kayong income kasi yung association, yung use naman is match only your expense. When you file your income tax return, at the end of the day, it will still come off zero. But if there's a reporting that this is how much I received, these are the expenses I generated, and it will come off negative. So even if I require you to file an income tax return, if you're really not generating revenue, it will still.
That would be for the income tax po. Pero yung clarification nga po yung sa VAT po na yun nga po, whether or not it is used for profit or profit, we are subject to VAT.
Yes.
Tapos po, we need lang po to update our certificate of registration.
Yes, and have your receipt stamped back registered.
VAT register.
And I believe I have another circular that said all receipt will expire by June 30 this year. So you have to go back and issue and have new receipts printed. I want to explain also that because that's also one issue that a lot of people are, why the rationale behind why are we putting an expiration date on the receipt. Because we find that up to this date, there are taxpayer percent who issues receipts that have been printed in 1978, 70 something. No? So it's and we find that there are some unscrupulous people who does not really have any business. Their business is to sell invoices. So there's a fraud going on there. That's why we came up with this, because we're engineering a lot of our processes, no, and making it online, like the application to print invoices and all these things. We reformed the whole thing in the sense that we set up rules what kind of printer can be accredited only. And second, we set up rules that said henceforth all receipts will have an expiration date. So do not print too much, just print the right quantity. Now the expiration date is 5 years from the date we get the authority to permit to print. And everything that has been printed before are going to expire.
So, ano lang po, kung magpapaprint lang po kami for the duration of the 5 years, kasi at the end of the 5 years, hindi na namin magagamit yung mga receipts na yan. At the end of the expiration, so kung parang magpapaprint lang kami for the duration, yung estimated namin magagamit for that 5 years.
Kaya kung talagang malakas kayo gumamit, you just print for 1 year, then before, di ba, para hindi rin naman maganda good business practice na overprinting na. Kasi depende, baka mahal rin yung pag-print ng resibo.
So yung balik po ko sa question po sa VAT, Visa Associates, effective po siya
January 1,
2013.
2013.
Thank you. So let me take this opportunity. I think that's a very good question, because let me take this opportunity as treasurer of IMMAP, because with this new circular from BIR, everybody now is vatable. So before, and it expired December 31, 2012, IMMAP was registered as non-VAT. So beginning January 1, and we were able to only implement it inside IMMAP around March, when we already sent out the billings for annual renewal of membership, and then there was no indication yet of the VAT. So when we received this circular around mid-March, we started to clarify whether IMMAP members who have paid their dues from January 1 until that present time, do we have to go back to them and really ask them to pay for the VAT? So let me take this opportunity, those who are IMMAP members, we're currently sending you an additional billing for the VAT in case you already paid your dues. Commissioner Henares, because we have a rule in IMMAP that our annual renewal is between January 1 until March 31. That's the annual renewal for IMMAP membership of 8,000 pesos. And then if you pay that within that period, you have a 10% discount. So for those who are early bird, and I think it's something like 75% of our membership already paid their dues within that period. So now we are giving out circulars, and reminding everybody that everything now is vatable, and IMMAP cannot shoulder the 12% of those members who have already paid. So let me tell everyone, Floor here, our secretariat manager in IMMAP is sending you that additional invoice. Okay, so any other question? I think there's another question. Let me go to her first.
Good morning to the panel. I'm speaking on behalf of the advertising agencies. So I guess one of our understandings of this circular is that the main principle that there should only be one OR for the whole transaction, or something to support the 1 million should only be one person should only be paying tax or have the burden. In cases where the costs pass through the agency, I understand that the industry was not able to find a solution to making sure that the OR is really from the client and addressed to the supplier, or that the CWT is only in the name of the supplier. But actually, our agency was able to find a solution to this that we implemented years back, and that's why we were able to always defend ourselves against PIR assessments. We have an acknowledgement receipt where we make sure that the OR is to the correct person who rendered the service. So in this case, where we are able to reduce that distinction, I would like to know if this is acceptable, because really we follow the principle naman that the BIR wants is I guess strengthening. So in that case, wherein we issue an acknowledgement receipt to the client, and the OR is actually issued, it's not to it's not to us. They didn't receive we didn't receive the funds from the client, but the supplier received the funds from the client. There's a clear distinction in that. Would it be acceptable?
First, an acknowledgement receipt is not a valid receipt. So, can you clarify what is it that you want me to say, whether it is acceptable or not?
The official receipt, there's an official receipt, which I know is a valid receipt, but it's issued by the client, by the supplier to the client. So we have no part in the documentation. Our only documentation to make sure that we are not the ones, that there are not two ORs issued, is that we issue an AR. So there are two documentation, but there's only one official, it's the OR, and it's only from the supplier.
The thing there is the problem is the acknowledgement receipt is not a recognized receipt. So that's the whole problem in the narration, in your equation. There's no problem about the official receipt being issued directly by the supplier to the client. I think your problem is your issuing an acknowledgement receipt.
Yeah, and actually, if I want to be mathematical about it, if the client, the whole production cost is 1 million, there's an OR from the supplier for 800,000, and then an OR from the agency for 200,000. So the total amount of 1 million is substantiated by 2 ORs. It's not double reporting of deduction on our end. That's why we only issue, but we receive the whole 1 million. That's why we have to issue an AR. But then for the 800,000 that we transmit to the supplier, because we pay them. Our role as an agency is to provide convenience to the client, to the advertiser. So the 800,000 would not be just one supplier. For production, it could be 100 suppliers. So that's why we give that convenience by issuing an AR for 800,000, but we pay the suppliers each their due, and then it totals to 800,000, which we substantiate through ORs.
You know, I think I would tell you something, another issuance I have that has nothing to do initially with advertising agency. Basically, in our other issuances are covering other professional organizations, like accounting firms, law firms, or whatever firm. We said all deposits made by client, you should recognize first as your revenue.
I also know that circular, but in this case, we only bill when the project is completed. So it's not actually a deposit, it's already a reimbursement.
Yeah, but it's still a deposit with you because it's not given, it's not supposed to pay you, right? So it's still a deposit, whether it's at the beginning, at the end, or whatever, it's still a deposit, right? And we have a revenue memorandum circular that basically said whoever received the money should recognize it as their receipt in their income, and then when then they require that the receipt be issued to their name. Let me explain the rationale behind that. Basically, the rationale behind that is that it's more prevalent in other professional organizations than yours, although it's possible that it could happen with especially the public relations. The reason behind that is we find that a lot of bright money are flowing through these professional organizations. It is masked as out-of-pocket expenses. So that's basically why we dug this loophole. And basically, I think, as a general rule, I don't like to make exceptions. Because it will just, we're plugging a loophole here, it will just move. You know, I mean, I have to be a cynic in my job. I cannot be, I'm by nature a very positive person, no? But with regard to my job, my first premise is people will want to do anything they can to avoid paying taxes. And people will try to do, I mean, businesses by nature, you want your objective oriented, you want success. Sometimes, because of the competitive nature of business, people forget the ethical sides. So that's basically why we put the RMC. So I think it's the same, it will cover all kinds of out-of-pocket expenses. So, there.
Clarifying question, thank you.
Thank you very much. I guess with your example of 1 million, the 800,000 goes to the suppliers, and the suppliers issue directly to the client. And then your agency is only just having 200,000. So therefore, your official receipt to the client should be just the 200,000.
Basically, her question is like this. The client gives him 1 million. The client did not pay the supplier directly. It went through them.
Yes.
So what I'm saying is if you went, I take the context of that out-of-pocket expense thing. We require that if somebody gives you money and you receive it, it should be in your gross revenue. Then everything that you send out, the thing there is you should get the receipt in your name. Exactly. You should not, because the objective there is to make sure it's the audit trail. Yeah. And to make sure that people do not, in effect, not use you to do and to legitimize, because if you bribe somebody, you cannot get a receipt, right? So they have to get a receipt. So basically what we did is because of the out-of-pocket expense. Yeah, if you want to bribe somebody has to pay the tax. So the cost of the bribery is, before it's 1 million, the cost now is 1,320,000. Or 1,444,000 because of the 12% VAT. 32 30 plus 42% VAT. So basically, that's the whole reason behind plugging all those loopholes.
Which set pricing was also account for. Which set pricing was also account for.
Because the principal of taxation, legal, illegal, income, all taxes. But only legal expense are deductible, illegal expense are not deductible.
Okay, that's a good insight. So I guess what's really important to remember here is we'll be able to do the audit trail of every transactions that we do for incomes, for inflows that we have, and for outflows that we will do in every business transaction. Okay, Ruel.
I just have a question just to clarify your point. When you invoice the client, let's say it's $1 million, do you, let's say the client places an ad worth $1 million, do you only send 1 million, one invoice for the 1 million, or do you invoice separately 150,000 and another invoice from the supplier for 850,000? So actually, your concern earlier, you mentioned that the concern was not addressed. It's actually addressed in the RMC 91/2012, where where it specifies split billing payment. I think what you were referring to when you said you issue an acknowledgement receipt is that you collect the check, the actual check from the client. So you issue the client an acknowledgement receipt that you receive the check, and then you from the client to give the check to the supplier. So you're actually practicing split billing. That's RMC 91/2012.
Okay. If you want to, the thing there is, first, the check should be paid directly to the supplier. So the check cannot be in your name. Because anything that's in your name, you have to issue an official receipt. So if they give you a deposit and it's in your name, then you have to recognize it as an income. Because the other thing is the withholding tax.
Okay, I understand that point. If we receive it and the check is in our name, we have to report it as income. But in the case there wherein maybe a held in trust account is created, wherein the check would have to be addressed to the held in trust account. It wouldn't be in the name of the company anymore. Would it also?
That's still the company. Even if you open the client trust account, who's the trustee? It's still you. So it's still issued to you. So it does not. I mean, because first, the check has to be issued directly to your supplier because the withholding tax, when he withholds taxes, it will be to the name of the supplier. Because if it is still to you, the withholding tax is for the full amount that was given to you.
Ma'am, just a clarification. Because my understanding is that when a company pays another company, the payee deducts the withholding tax. Withhold the tax. So in the process of having a lot of payment process, like in their case, let's say an advertiser pays them, so the advertiser withholds a tax from them. But when they pay another supplier, they have to withhold a tax again. So there are multiple withholding taxes. So that increases the taxes payment. Is that the case?
Yes. There are, so it's just, the number of withholding tax are the same. The only question is who will withhold.
But basically the amount also increases of the, the percentage is the same.
It's not the same. Because if you, let's say, you bill 1 million, so the client will withhold on the 1 million. Then you pay the supplier, the supplier will receive you. You as an advertising agency will withhold on the 800,000. Whereas if it's from the client directly to the supplier, the withholding is on the 1 million. In this case, it's a withholding on 1,800,000.
So more payment of withholding taxes, or more taxes withheld in that case.
Yes.
Thank you. I think you have a question.
Good morning. My question is for the commissioner. So, we're a direct advertiser, so we usually place ads online, specifically to Google and to Facebook. My question is, how do we record it as expenses? Because we don't usually get receipt from it because the payments are usually made online and by a credit card. So, how do you record it as expenses?
You have the documents, okay? And you don't have a receipt. You get a receipt from them. You have to get an invoice, you have to get a receipt. Because if you don't, then you cannot be taxed. So if you pay for it abroad, first, you have to get a receipt and then you support it by remittance. Because it's a validly issued receipt abroad. We're not asking, I mean, if you bought a service from abroad, then you should show the receipt from abroad. Then you put there your evidence of payment. Show that it's really services or goods procured from abroad, and this is the invoice. So even if you travel, when you travel abroad, when you come back, they require you to give your statement of account, right? They require you to give all the things you ate abroad. They will ask you to give the receipt of the restaurant. Same way, you're required to present the receipt.
Does that answer your
There's a
question?
statement of account.
So you go after Facebook and Google for the receipts. Oh, we have Yahoo people here. So he's asking, you have to advertise in Yahoo, they will give you a receipt. Okay, I think there's another question in this table.
Pablo, just to add to that point, I think both Google and Facebook, in the dashboard, there's a statement of account, and there's also it's not like a receipt, but it's a sign that they received your remittance. So that's that I'm not sure if that's enough basis for, but it's something that you can hold on to, which shows your records. But I advise that if you get to a point where you've graduated or you're starting to remit large amounts, you really might want to consider dealing directly with that and enter a proper invoicing relationship. And you get an invoice from them, Singapore, Ireland, or something like that. Proper.
Sorry, Commissioner, just to officially clarify, when you pay online, there's a sort of a letter, confirmatory letter or statement that's generated to say that your payment has been received. Is that enough to, is that a document, can you use it as a substitute to an official receipt?
So this is a statement about what are you buying. Because just a receipt that they receive money, I don't really know whether a service was provided or not. There should be basically a description, what was it you're buying, a statement of account or something, then evidence of payment that you paid them, most probably your credit card statement, most probably, right? Or the acknowledgement receipt is actually connected to your payment, but you have to have a receipt that says, what is it that you're buying? And who? Yes.
Okay, so let me just remind those who are asking questions, please state your name and your company and then shoot your question.
Good morning. I'm Cecilia Balitaan from Inch Inquirer Publication, a sister company of Philippine Daily Inquirer. So for clarification regarding this RMC, di po ba the first RMC is the billing to give you the facts, there are three parties here, the publisher, the agency, and the advertisers. And RMC1 stated that the billing goes, there will be one billing that goes directly to the advertisers. But the payment could be split. 85% goes to the publisher and the 15% goes to the agency. And the second option is the advertisers receive two billings, one from the agency and one from the publishers. So the advertisers make two payments. So in this case, ma'am, parang the option, sabi niyo, there's an option. So the option seems to be the absolute right to choose is on the part of the advertisers. Di po ba? So pag pigilan na ni advertisers na option 2, meaning he received two billings and he made two payments, dapat po sumunod si agency and publishers. Yeah. Ewan ko ba? Kasi, kaya po, paano kaya may enforce na ganun ang mangyayari? Pag sinabi ni advertisers na dapat ba in writing or verbally lang?
I gave you two options, no? But at the end of the day, I don't think in business it's the advertiser who dictates. No? It's really the media providers. At the end of the day, I'm an advertiser. The advertiser, if all the media said we will go to split billing, the advertiser had no choice. In reality, in an advertising industry, it's the media that really dictates what is it that. But if your policy is, I will do only split billing, everyone will follow, because you will not allow anything else, right? If you don't want to follow us, you don't place with us.
So if the publisher wishes,
kung policy nyo, kung gusto nyo sumunod lahat ng tao, yung policy nyo, ganito lang kami.
okay po.
So, nasa inyo yan. Hindi kami makikialam kung ano yung magiging desisyon. Kung yung publisher or yung media, gusto nyo flexible kayo, okay rin. Gusto nyo mag-dictate kayo, okay rin. Wala akong problema.
So sige po, at least clear po. Kasi kanina impression namin is the right to choose lies on the advertiser. So,
Reality is it's the media who dictates, right? Right?
okay po, it's clear po.
Good morning po. Follow-up question lang kay Cecil. I'm Wilbel from Philippine Daily Inquirer. Kung sa billing namin, mag-bill kami kay advertiser ng 100%, kailangan pong sumunod ng agency doon sa billing namin.
Usapan nyo naman yan eh.
So, i-bill namin si advertiser ng 100%. Tapos kami yung babayad kay
commission sa agency.
Yes, ma'am.
Kung yung policy nyo,
Okay, thank you.
wala naman problema. Sa inyo yun.
Thank you.
Kaya lang, sisigurado kaya nga sabi sa inyo, sumusunod lang kami sa paano nyo nililisigo. So, kung kayong lahat despite sa dalawang RFC namin, gusto nyo pa rin gawin yung dati yung ginagawa, nasa inyo yun. Pero huwag nyo kami sisisihin na pag ino-audit namin kayo, advertising agency, 100% namin kayo isisingil, at yung media, 100% din namin kayo sisingilin. Kasi ganyan kayo nag-resibo. So, yun lang naman yun.
Thank you, Commissioner. Now, for the Philippine Daily Inquirer people, the tables have turned from the media to the agencies, rather from the agencies to the media. Isn't it wonderful? Huh? Okay, Ruel.
I would just like to speak in behalf of the agencies.
Okay.
Actually, the reason why we've been working at this for 15 years is precisely to address the concerns of all the sectors of our industry. Now, there's a very good opportunity, the two RMCs that we have, because we now have two recognized procedures in which to bill and collect your payments, which the second RNC, which is 91-2012, the split payment, as we view it, and after consulting all the associations agree that the split payment scheme is the most equitable. One, because it assures all suppliers, including the agency and the media and the photographers, etc., will be paid by the advertiser. So it doesn't have to go through a third entity for them to get paid. Because right now, what is happening is that let's say whether it's a media placement or a production cost for a TVC, let's say 1 million, it's the agency that bills the client, and the client pays the agency, and it's the agency that disperses the amount to the respective suppliers, including media. Now, I think the concern lies where in that amount of time it takes for the payment to get to the respective company. So now with the split payment scheme, all of us can bill the client separately. Okay? But going to the client side naman, kasi there's also concern on, let's say for example, if I'm a nationwide brand and I, let's say, place in 20 radio stations, we will be swamped, the client will be swamped with 20 billings from radio stations plus the advertising agency and the different suppliers. So to make it more convenient for the client, the agency still plays a central role in collating all of this and monitoring. So that's where we can help each other. After all, we're all in this industry, and the split payment scheme was devised precisely for all of us to get paid on time. So if I may recommend, please follow the split payment scheme. It's going to be much simpler, much easier for the DR to monitor, much simpler for everybody to monitor, the agency, the client, all the affected parties.
That's true.
Just wanted to add, these two options are compliant from a tax standpoint because they're covered by RMCs. The choices of what we use as an industry is more a commercial and transactional issue, right? So it's beyond a question of taxation. So we need to talk, engage, and as Roel said, we need to find what's best for all of us. No? There are issues beyond taxation. I mean, this is not just a taxation question for us. There's ease of doing business, which is, I think, very important in a very complex industry like ours. So if there are questions or if there are concerns to what Roel shared on the preference of 4As, let's talk about it. But it's not a question of taxation anymore. It's more within the industry on what works best for us.
Let me also take my hat as a supplier, because even with that best practice that we want to propagate in the industry, now I noticed, based on our business transactions, some of the clients would also now transfer the role of the agency to a major supplier and let the major supplier handle everything. So I guess education is also on the part of the advertisers, not to really advocate what is best practice and what is more doable and practical in doing business with each other. Because now I notice that it has really transferred from the role of the agency as the coordinator of all of these things, and now the advertiser seems to have a pattern of appointing one major supplier and let that major supplier handles everything with regards to payment, etc. So also on the part of the advertiser, these things also has to be in terms of education. I think there is a follow-up question from the Philippine Daily Inquirer.
Sir, is it okay to give 85% billing to agency for their monitoring and 85% billing to the advertiser? Hindi ma'am. For yung 85% for the agencies for their monitoring purposes, and the 85% is straight for the advertiser.
Yes, actually that's what.
Tapos agency will bill the 15% for the commission.
Yes, actually what happens now, at least with our agency, the practice that we do is that the media suppliers send the 85% invoice to us, and then our invoice of the 15%, we send it together to the client, so that the client receives it as one whole package. But it's still split billing. And then we also coordinate with the client as to the payments to the agency and to the media, so that the client only deals with one person.
With advertising agency, no, we don't have messenger. Of the media.
Okay, Miss Bonnie, your question.
Hi, good morning. I'm Connie Balmaceda from Works Interactive. I'm addressing two issues. The one where we pay online with a credit card. We use the payment, our payment to the credit cards as our receipt or as our proof of payment to Google or Facebook. Did I understand it correctly that would suffice? Sorry.
It's not enough.
Oh, it's not enough.
You have to have a receipt from them.
Not a receipt from the credit card because they don't issue a credit
Statement of account and a receipt.
Yeah, we do have a statement of account from the credit card, and that's
No, statement of account from Google.
Oh, okay. And
From whoever is
yeah,
you bought.
okay. We do have that statement of account. It's available online. So would that suffice? Since our
Yeah, you
supporting
have the
documents-
statement of account and the evidence of payment.
Yes, through the credit card.
Yes.
Okay, that would suffice.
Yeah.
Okay, thank you. And secondly, we practiced option one where the advertiser pays us, bills us in full, and then we pay the supplier in full as well, okay, with the 15%. My question, we have no problem about that. My question is the charging of the cost. From the advertiser's point of view, since they paid us in full, that means the media cost plus the service, our commission. So they're paying us in effect, let's say up from 100 plus the 15%, so 115, then there's the VAT, okay? So the VAT will be based on the 115, correct? Okay, so if that happens, from the point of view of the advertiser, they will pay us for, they will claim the media cost of 100 plus the 15 plus the VAT, right? But from our point of view, we'll be reporting a media cost of 100 plus the VAT. So that means there will be double reporting of the media cost.
Because you know, because you're an advertising agency.
Yes.
Isn't it, let's say the client advertised in TV5, 150,000.
Yeah.
Right? What TV5 does is bill the advertising agency for
Yes.
150,000. Let's say that does not include the VAT, so that's VAT of 12%.
Yeah.
So that's plus 18,000.
Something, yeah.
Then you bill your client for 168,000, right?
Yes.
So your client will have be holding only your receipt for 168,000.
That's right.
Then when you pay this one, what you say, you pay him 150 minus 15%.
That's
Right? So your cost now will be 150 minus 15%, then 45,000, right? So you will now have a receipt of 105,000. So your 150 minus 105, you have 45,000 left. That's your net income, gross income.
That's right. I have no issue about that. It's just the reporting. The advertiser reports a media cost of.
You should make sure the TV5, when he issue a receipt, it is to your name.
Yes, that's right. We have no problems about that. It's something like, let's say the media cost is 100 pesos, okay? And then the commission, let's say it's 15 pesos. Basta yun ang napag-usapan. So, 115 and then the VAT of 12%, so that's 13.8. So, a total of 128.8. Okay. then of course there's a 2% withholding tax based on the 115 because that's the one that they'd be paying. So it's 126.5 net pay. But from the advertiser's point of view, what will they report in terms of expense? It's the media cost that they pay to the advertiser, to the agency. So that's 128.8, right?
They will, 150. They will expense 150 because that's what they're paying.
Yeah, because that's what they pay the ad agency, right?
Yeah, because that's their expense, 150.
Yeah. Okay, and then the ad agency naman in turn, because they paid the media company, the supplier, 100 pesos. So they will report that as their media expense. So my question lang
So
there
they
is,
will expense 100.
yes, that's right. So my question is, there will be a double reporting of the media expense.
No, because it's being reported by two separate people.
Yes, that's right. That's right.
It's not a double
That's
reporting.
okay. Yeah. In effect, the advertising report a media expense, which includes the payment to the media plus the agency's commission. Kami naman as the advertising agency, we report the media cost. Tama? Yeah. Walang service fee.
No, so in effect, parang hindi ka advertising agency. Diba? In effect, the advertising agency bought the service. And then you resold that service. It's like all the trading company, diba? Like me, if I'm a distributor of a product, diba? I buy something, that's my cost. But that same thing I resell, so that's my revenue. It's not a double take up because it's being taken up by two different persons.
Yeah, it's being taken up by two different people, and they are incurring in a sense, the same media
Because you're
expense.
trading.
Yeah, that's right.
Yeah, so you're reporting your
that's
net
definitely.
income.
Yeah, but the setup would be different if separate ang billing, di ba?
You have a choice.
Yeah.
It's
okay.
up to you to choose.
Yeah. Okay. Thank you.
So are you doing split billing now, or you aggregate the payment?
You have a choice.
It's your choice. Yeah. For as long as they do a lot of, they
So
just
if you look at the first RNC, we tackle it as payment to the media provider. The media provider gave the commission to the advertising agency. But using that same principle, the client or whatever your relationship is, you want to pay fully to the advertising agency, that's also fine. But then the advertising agency will pay to the media provider. That's okay. But the implication there is the withholding tax now becomes bigger. Because the withholding tax is based on the gross amount of the full transaction. It's now the withholding tax on the client paying to the advertising agency for the full, in that example, 150. When the advertising agency paid the media, they will now have to withhold against it the 100. So there are tax implications because the gross goes up. In the RMC, in effect, we're just saying that there's no grossing up. But if you want to go through the advertising agency and go to the media, that's fine. That only means your gross goes up. Remember, there's a VAT, so your VAT goes up. Although, syempre, may input VAT deduction yan. But if you're on a percentage tax, because you did not exceed the threshold, your 3% is a cascading tax. But you'll be paying 3% of the whole when you did not get the whole.
okay. So we're managing
Sorry.
time. Yes, Mike.
I don't know if this is like the right way to look at it, but it really helps me personally when I look at this to actually separate that from in your head from the transactions to begin with. So, because you never had that money. even if you bill for it, it's not yours. Parang it's almost like outside the system already. And that helps me a lot, kind of like shape parang our planning in the office and stuff like that, so we're not scrounging around for it when the time comes. It's never something that you have in your hands to do. So even when you're mentally doing your computations, it's always 100 plus that. I mean, I still see clients sometimes that are like, you know, when they say, okay, our budget for this ad campaign is 200,000 pesos. And then there's always this question, VAT exclusive ba yan or VAT inclusive yung amount na yan? Parang, I think one of the things that this industry needs to do is agree on one metric or another. And I think for me, the easier metric is that VAT always exists, but you never had it. And therefore, everything, but if you're saying your budget is 200,000, it's actually 200,000 plus 12%. That's how much the advertiser should be willing to pay. So, I don't know if that helps.
Now, just one quick illustration, just to clarify the question that you did earlier. So as there's no confusion, for example, I'm selling, I want to sell this item to Mix. I got this kunyari for 8,500 and I want to earn a 15% commission. So I'll now sell it to Mix at 10,000 pesos, right? So now the VAT will be based on the 10,000 pesos that I sold to Mix. So there's actually, what happens is that your product is no longer now the 15% alone, but the whole 10,000 pesos. So that's what happens when you cross up. So that's also what happens when the client or your agreement with the client and the agency is for the agency to bill the whole 100% to the client. So now it will be up to the agency to pay the municipal tax and the withholding tax will now be based on the 10,000. So that's how to simply illustrate that particular transaction. Now, if you don't want to shoulder the municipal tax of the 8,500 it costs you to buy the iPad, then you tell the client, I'll give you 2 invoices, one for the 8,500 and one for my 1,500 commission plus VAT. Then give me 2 checks, and there will be 2 more for you. One for the 1,500 and another for the supplier iPad for 2,500 plus VAT.
That's right. So it's really the principle that we're going to follow. Okay, so since we are managing time, as those questions that you want to raise, please email them to secretariat@immap.com.ph, and we can also forward it to our panelists and they will reply. Okay, so last parting shot from each of our panelists, maybe just a minute of your parting shot about this issue, starting from Kim.
As I said earlier, we have options. The options are clear, and there will always be some pain, especially when you talk tax, right? It's part of the reality that we live with at this age. Advertisers prefer that we have clear solutions, and at least we have 2 options that you can choose from depending on what you need will give you the best piece of business and more competitive. So it's called comply and follow this.
Thank you, Commissioner Henares.
Well, I mean, we tried as best as we can to clarify things. Actually, there's more than 2 options. But you can choose other options. The only rule we have is whenever you generate a receipt, it will come in as a gross receipt to you. It will make in effect, in a 1 million transaction, it will appear like it's more than 1 million. Because that's the trigger is really how you document it. And when you document it and it translates into a bigger transaction, there are always more tax consequences. But you're not limited to the 2. I always say that it really we follow what receipting you do. There are clear rules in the tax code. If you receipt it this way, then that's the way we would treat it. Then these expenses, there are clear rules that it has to be substantiated. So basically, that's just as much as possible, I believe that it's really the industry and the convenience of the industry and all the players that will dictate how you do your business. It's not the Bureau of Internal Revenue. But how you do your business have a consequence in terms of how you are taxed and how it is treated. So basically, I hope we have been able to clarify it, and I hope that this would address most, if not all, of the problem the advertising industry have with dealing with tax authorities. And I believe that in either of the two, they also try to address your issue not only with us, but with the local government union.
Thank you, Commissioner.
Okay, from my part, there is, as Commissioner said, aside from the two options, there are also options available. But from my thinking is that there are already options that have been outlined by the BRR and clearly recognized. Now, from the part of 4As, we're recommending that we go with the split payment because really it's the most equitable for everybody. Now, if there's a point of discussion on the convenience, so many checks, then I think that's something that internally you also discuss with your client on how to arrive at the best practices solution. And also, you need to also consider, do you pass on the tax or not? If it's not too much, then why don't you? And of course, this depends on your business strategy, but you can already absorb that or whatever, just look at the long term. But the most equitable really is the split payments for everyone.
Thank you, Roel. Mike?
You know, when I first read the circular, the first gut feel, just glancing through it was like, what? The BRs are trying to, recommend one commercial, one over the other. That's like my knee-jerk reaction. But after going through it a couple of times and talking, about it with other industry players, and even looking at the maturation of a lot of the businesses that I see in this industry, parang, where things like credit risk is becoming an issue, or non-paying advertisers is something that sends a chill down every agency and publisher's spine. I start to see that, this makes a lot of sense. And it also, in a way, forces all three dancers, I guess, or players, to have a commercial, to come up with a clear commercial model on how they're going to operate. Whether that's on a commission basis, whether that's on a retainer basis, whether you're going to put it all together, or whether you're going to separate it. To Clint's point, it's more than taxation. It's a commercial agreement between three parties. And I don't even necessarily subscribe to the fact that it's publisher-centric, that the publisher can entirely dictate. Because if the advertiser is also in a position to have a voice there and say that, we don't have to work with you if this is the way you want to do it, then we operate in a different manner. It also changes the role of the agencies, not just, and every agency does not just have a kind of like marketing and strategic responsibility to their clients, but also a fiscal responsibility to them. To make sure their clients are perceived in the best possible light, even in terms of payments, and to make sure that transactions can keep flowing. So after all was said and done, and at the end of this discussion, we have two options. There are others on the table. Of course, they might require more explanation because there'll be like the kind of non-standard or alternative models. But the reality is, as long as everything is documented properly, then you wouldn't have any problem. And that's something that we should all get towards if we're not there already. Okay, with that's it.
Thank you very much, Mike. Well said. And just a reminder to everyone, our future forums in June, we will have advertising to children. We will still also work it out with PANA. but definitely that's going to be the topic for June. And for July, it's our TPCC as digital marketing sector. That will be rolled out by our TPCC Trade Practice Committee Chair inside IMMAP. So please mark this in your calendar and spread the words to your colleagues who wants to join us in this forum. So on behalf of IMMAP, we'd like to thank Clint, President of Ad Standards Council, and also of PANA. Commissioner Inares, we're very grateful that you are here with us to really clarify straight from you all these revenue circulars. Roel of 4As, thank you very much, and we owe it to you and your group for really spearheading and making it happen, working it out with BIR in making our business transactions more smoother and well properly documented and handled. And of course, it's an industry effort. Thank you so much. And then Mike, our Vice President for IMMAP, thank you. You have made a summary of the important points that we have discussed today, and you will be always our panelist in the Breaking in the Morning forum. I know you're complaining, but you're doing a good job. So for everybody, thank you so much, and we'll see you again next month.